Awesome. Hey everyone, I'm Charlie Shrem, and congratulations to Binance for their third year anniversary. It's super exciting to be here live. I'm here with some friends and some new people that I've never met. I'm excited to be here with you guys. Roei, Michael, Darius, and Justin. Awesome. How you guys doing today?
Pretty
Good.
Pretty good.
Doing well, thank you.
You guys, in the research leading up to this panel, I was blown away looking at how you guys built your respective businesses and taking the common denominator on that. It looks like that you guys had all started your businesses based on inefficiencies that you saw in the Bitcoin industry and that would led into the larger crypto industry. You know, in the early days, people were doing OTC on their cell phones under their covers, you know, texting their friends, like buying and selling Bitcoin and crypto. How has that changed? How are people trading now? I'd love to hear everyone answer.
I'll go first. Hey everyone, this is Michael. I'm the CEO of Hummingbot. We're an open source project that allows anyone to basically build and run market making and arbitrage bots on our platform. It's basically like it's like a open source like bot like CG miner, kind of like for Bitcoin. But overall, we've been in the space for 3 years. So we started as a fund, and so then we were really bad at running a fund, and that's why we switched to creating open source software instead. So I think the biggest thing that's changed in my perspective is really just at the maturation of the industry since I started, at least 3 years ago, which is actually fairly recently. But if you think about like how many gyrations we've had in the market since 2017, it's pretty incredible. And we had like the ICO boom, and then we had like IEOs, and we had like, I would say, I think the biggest thing that's changed is really the maturation in terms of having derivative products in the space, both on centralized exchanges, and now we're also seeing that on decentralized exchanges as well. And the introduction of these derivative products as well as lending products has really kind of like turned crypto into almost like a mini microcosm of what the traditional finance industry looks like. And I think over the next few years, we'll see more and more of that. And that I think we'll see eventually kind of this shift where like the crypto industry, which is like a shadow of the traditional finance industry, kind of eventually kind of eats that traditional industry.
Justin, are people trading Bitcoin and crypto different than they're trading traditional equities and commodities and things like that?
Yeah, that's a good question. I mean, so for example, when you mentioned the OTC and folks trading back in the day when
I
their
still
phones,
do that with Darius.
Yeah. Today, I mean, there's still a lot of OTC trading that goes on over chats as well, and that's akin to traditional finance. So very quickly, my background is actually in FX trading space, and I'm an internal transfer from our parent DRW into Cumberland. And you know, our job is to build a business, as Michael mentioned, that sort of mimics how in the operational elements, the professionalism that exists in traditional markets. And so if you were to trade FX or some derivative products over the counter in traditional finance, you would do it over a chat room like Bloomberg, for example. And you know, even today in crypto, years onwards, you know, we still trade in chats, for example. Now things have evolved slightly more. You can also trade, for example, on APIs or electronic trading. Not just, you know, most people think of APIs connecting to an exchange, but for example, you know, for someone like us, for example, at Cumberland, we offer APIs for folks to connect to us to, as well as a GUI, a single dealer platform. And so this is just an evolution of crypto that follows in line with traditional finance, the different execution methods, if you want to call it, for people to be able to trade today.
It's so interesting that I didn't know that people were trading on chat rooms, and that's how it was done in traditional finance. And to take it further, I didn't, you know, I was looking at the Bloomberg terminal that costs $2,000 a month, and even in today's age, you still need the physical Bloomberg terminal. And I was looking at the value propositions. I was talking to someone. I said, "What's the value? Why would you buy this?" He said, "Well, actually, I don't even use it for the data. There's just an internal chat room of people buying and selling cars and homes and things like that. It's like a whole trader community." Yeah. Do we have that in crypto?
I mean, I think there are definitely chat rooms in crypto where people discuss specific topics. It could be something like regulation, et cetera. in terms of trading, because of confidentiality, chat rooms, when I say chat rooms, I mean, for example, a trading firm's team and another trading firm's team. So it'd just be the two parties involved and not necessarily a very large grouping. Although there are some groups like that, but I'm not so familiar with them.
Thank you. Roei, what type of, now the topic of this panel is trading strategies, finding your trading edge. You all, and I'm curious to hear how you guys all do this and your clients. Roei, at Efficient Frontier, what type of edge are people looking for? You talk about high frequency trading. Are people, Michael talked about high frequency trading a second ago. Are people really looking for in crypto like that 3-4 second difference on trading?
Yeah, so we're at Efficient Frontier. We're doing algo trading strategies, developing HFT kind of infrastructures. It's actually not 3 seconds. It's much less than that. This is like endless time for us. 2 to 3 seconds. It's like way to the future. We're talking about
3 milliseconds.
Something along these lines. Something like probably 20 to 100 milliseconds overall turnaround. It really depends. I mean, this evolved very significantly over the last few months. We are seeing, when we started, this was like, very far from that. Even the largest exchanges were facing a lot of challenges around these topics, where you have millions of connection concurrently, and you have the exchanges operating not just an exchange as a matching engine, also the bank, the clearinghouse, the broker itself. So the challenge is immense. This is not something that we are familiar with from traditional markets where we come from. So we have seen a lot of issues around stability and explicitly around volatility. When the market is very volatile, we see exchanges struggling to answer the demand, which is tough for an HFT firm like ours. So we had to develop a lot of systems and a lot of risk management processes to kind of understand better what the market condition is, what the exchanges looks like at any time, when to be in the market, when to be out of the market. So there's a lot of things that we needed to develop specifically for crypto. And I think in general, like Binance specifically is probably leading this right now, alongside with a couple of other major exchanges. But we are seeing a very interesting progress. This is becoming similar to what we are used to in traditional markets, and we are, investing a lot in making this better. So yeah, today we are down to the milliseconds. That's been progressing very nicely.
And it's funny that you say that, we compare traditional markets to crypto markets, because they're completely different and inefficient and efficient and mature and immature in all of its different ways. And so, Darius, one of the questions I have for you, because you deal with large clients and retail clients as well, what are some of these type of things that in trading crypto, in trading Bitcoin, trading altcoins, we're talking about finding our edge. Are there products, and this may be a question for everyone else, are there products and services in our industry that we still don't have today that are preventing larger family offices and bigger funds, et cetera, from coming into our space because they're waiting for this and they need something? And you guys can all jump in and take that answer too.
No, I think that's a very interesting question, right? Because we are right. I think we are right at the cusp of of that changing from being a non-institutional asset to starting to become an institutional asset. In especially in the derivative space, right? In like futures and options, you have that trading on the CME, and that has allowed a lot of institutional interest to start deploying in the space. And it's just this year that we started seeing options volumes grow, futures volumes grow as well, a lot on the CME, and we start seeing very top names in the traditional finance space start to come in. We have Renaissance guys talking about investing in the space. You have Paul Tudor Jones saying that he's taken a step in the space as well. So to answer your question, I think it's while we didn't have a lot of this infrastructure, I think a lot of that's being built now. And I think especially in Asia, I think adoption is a lot bigger than a lot deeper than people think. In terms of usage of stable coins for doing traditional business, that's just very, very big in Asia as well. So yeah, I mean, to answer your question, I think we are getting there.
I remember talking to someone in 2012 or 2013, and he said, or she said actually, in order for Bitcoin trading, and it was just Bitcoin, to be successful, in order for Bitcoin to become successful, you need the ability to short it. And I didn't come from a finance background, so I didn't really understand why would you say that. My understanding was we need to make people have the ability to buy and sell it. Why short it? And that led into the conversation that any mature market really needs options and derivatives. Now, I have to be honest with you guys, I didn't foresee derivatives to be so hot, especially now. It's just constant. I mean, you look at Binance FTX, you look at all you guys are people mostly trading spot? Are they trading derivatives? Most people don't understand that when you're trading a derivative, you're not actually buying the asset. You're buying like almost like an IOU of that. Could we potentially have like epic short squeezes or epic like liquidity squeezes down the road because so many people are trading derivatives now?
No, I think this year in March, right? There was this year in March, the big move, the 50% drop in a single day. That was a function of derivatives, a function of a ton
Derivatives
of
are supposed to
leverage in the
prevent
space.
that from happening.
No, the leverage. I mean, it works both ways, right? I mean, in this case, Bitcoin is highly speculative because the derivatives in the space allow for very, very high leverage. So you have that kind of moves happening. But at the same time, as the derivatives markets get more mature and as infrastructure improves, you would see volatility drop as well. Like we've seen recently. So I think it works both ways. I think it's a function of leverage and a function of infrastructure.
Michael, what trading strategies are people looking at right now? What's your top algorithm bot? You're looking at scalping, day trading. What are people using right now?
Yeah, so one thing with Hummingbot is we focus on market making and arbitrage strategies. You can use it to build any type of trading bot or some type of like process that runs 24/7. But the reason we find that people tend to focus on market making and arbitrage is because our users tend to be kind of like more like serious algo traders. So they're not looking to like just like place bets. They're looking for a way to like generate passive income 24/7 by running some type of automatic process. And so what we found is a lot of the guys in this panel, they're playing like the big markets, like the Bitcoin tether market and Binance, or in perpetuals or futures and margins products. But there's tons of like small markets where there's like very few attention from professional market makers.
The small caps.
Yeah, exactly, small caps. And for the small caps,
chat rooms, I have chat rooms for small caps.
Oh yeah, and these are the guys that before these guys are like trying to give their tokens away to the folks on this panel for them to market make for them and pay them money. And even with that, it's still hard for the folks. And for professionals to like devote the time, is really the time actually to like research a market, understand it, and trade it. And so what we found is, for our users, they're small fish, so they should actually play in small ponds. And so when they play in these smaller markets and they run either arbitrage or market making strategies, especially when they're rewarded. So we started this like decentralized, we'll call it liquidity mining platform recently, where token projects can reward users for market making on their trading pairs. So when you factor in those like additional rewards on top of the fact that you're paying lower fees as a market maker, and plus the fact that you're playing these like smaller markets, I think that's where individuals can frankly can actually profit, because when you play in larger markets, you're competing against lots of folks who are paying very little fees, and you're at an inherent disadvantage. So I would actually encourage frankly individuals who are attending to really look at these smaller trading pairs.
A lot of people got kind of caught holding the bags. A few years ago, I was watching the previous panel here, and Michael was talking about how basically he has VCs coming to him with all these coins. And Darius will jokingly tell me like liquidity isn't that great. So what do you do in that situation? I mean, you have people who have these tokens, these small caps. What's the strategy for trading in and out of these things? You have someone who's coming in and they just want to get involved. Is there like a basic strategy that you can kind of advice that you can give to someone?
Yeah. So the one thing to remember about like I guess high frequency trading is that most of the strategies are designed to try to make money regardless of what direction the market goes. They're actually the same strategies that hedge funds use. And the way it works is if you're market making is you're like a merchant. So you're you're placing a buy offers and sell offers into the market. So you're basically profiting from people coming to you and buying, selling. So you're trying to make money off the spread. Now you do take risk because your risk is when the market moves, your inventory position changes. And so you're always either on the wrong side of the market, so to speak. So you essentially have this kind of like market volatility combined with inventory risk. That's your primary risk. And in DeFi, this is called impermanent loss. In centralized exchanges, this is called basically market making or volatility risk. But I think it's a different type of risk than the risk you have when you're holding the bag, because in that scenario, you're dependent on the coin going up to make money. When you're market making or arbitrage, is really about how you define your trading bot and what kind of parameters you put in that bot that defines how it behaves as the market kind of moves around.
Yeah, that's so interesting because sorry, did someone try to speak?
Yeah, I just wanted to add to that a couple of things. It's actually demonstrated pretty well why you actually need derivatives. You know, you need to be able to hedge your risk. You don't expect like large hedge funds and pension funds to get into the market putting like $1 billion on an asset that can go down like 20% the next day. This is like impossible to do. It's like even illegal. So this is kind of good demonstration of why you need derivatives and more specifically options. So you need to be able to have the opportunity to hedge any type of risk that you're taking, entering the market. And you're right, Charlie. Before you said about the risk of trading derivatives and what can happen with like large leverages and stuff like that. We have seen this in March 12, where a lot of liquidation happened and the market just drove down, completely crashing. And
what happened very briefly in that situation? Can you explain?
Yeah, so basically a lot of stop losses were triggered because the market was going down, and while the market was going down, the collateral, for example, like BitMEX specifically, are using Bitcoin as collateral. So not just that the market is going down tremendously and triggering all the spot loss, the collateral itself shrinks down. So you are getting out of your position, not just because the price is going down, because now you don't have even enough collateral to in your account. So this is double trigger the trend. And at some point, BitMEX we're intervened in that and kind of stopped that. But it is, it was a major crash. It's like a perfect storm in a kind of situation.
It was a perfect example of how it all went down.
And this is what I said before. If the markets were stable enough in terms of connectivity and the ability for market makers like Hummingbot and ourselves and others to be in the market in that situation, this would actually help the market. But what happened in this situation in crypto specifically is that a lot of exchanges are not handling that. So even people that want to buy in and kind of stop that cannot do that. So we have seen other players trying to reach the exchanges over and over again, just kind of washing it with requests, which actually creates a much more problematic situation all over the place. So yeah, that's gotta
Actually, my next question, and more than welcome to answer it, anyone can answer it, was that I think a lot of people don't actually know the difference between market making and something like wash trading, where one is extremely important, the other one is terrible, and it's almost like almost like the difference in anonymity and privacy. People don't really understand the difference between the two. How could you explain the difference between what is market making and why is it important for like a stable, liquid, healthy, mature market and industry?
It's actually pretty easy to explain, honestly. Market making is basically like placing orders on the book to make sure that you have enough liquidity to buy and sell, assets with the normal prices. This is really what it is. Wash trading is basically trading with yourself to inflate the volume. A whole different story. So somehow, and we were struck by that when we got into the market. We were struck by how popular the this practice is around the industry, where market makers suddenly becomes not market makers, but market takers, and they're actually taking from themselves because there's nobody to take from. And this was like, we can.
Well, you have Cumberland, QCP, Hummingbot, Efficient Frontier, and others are like the blue chips, the shining cities on the hill, and then you have a lot of these other ones that come and they, I mean, we all get the telegrams offering shady services or whatever. Has the industry been cleaned up a lot lately in the past 6 months?
I can jump in here, and I mean, I definitely think there's been a great deal of consolidation in the last year or so, or even 2 years, Charlie. Well, there's always new names starting up, and there's always a lot of venture capital money coming in to back great ideas. I think people find that it is difficult to run businesses in this space, and in particular, going back to what Roei was saying just a second ago, I think part of the reason why people struggle and why the market can be difficult is because of participants' inability to focus on their risk management. So we talk about derivatives, we talk about leverage, et cetera, but you're talking about trading a product that can move 10, 20, 30% per day, 90 or 100 plus vols. In many ways, these are not really instruments that people should be deploying a lot of leverage with. That you should be being very careful and being diligent about how you place your orders and how you position and how you scale and size your position. So I always like to talk about this topic on panels because folks get very excited when markets move and when markets get volatile, people jump in very large size to make quick money, and I think that's where they can get caught up. And Roei mentioned earlier, one of the things that's difficult about crypto in particular is the fact that there are technical infrastructure issues that cause the market to gap quite a bit. And so even if you were to leave an order to exit a position, if it were to go against you, you might actually not get filled. And so, if you just run scenarios over and over in your mind, you actually have to take that into consideration that, maybe one out of every X amount of trades you put on might not get filled in a black swan gap event. And then, what is your loss in that situation? So you have to, the example I like to use is always having enough chips to sit at the table. If you lose your chips, you can't sit at the table.
But you also have to know that if you leverage too many of your chips, or if you bet too many of your chips and you have very little left, you won't have enough skin in the game to continue playing at that table. Is that kind of what where you're going at, right?
That's exactly what I'm talking about. And I think the most painful thing to hear is folks or friends' stories where they've been in the game for a long time, early OGs, and they got caught on the wrong side of a move and lost a big chunk of their hold bag, right? That's, if people are playing for Bitcoin to be at 100,000, for example, or more, you don't really want to be going crazy, when it's not moving around, in a daily range of $100, right? You want to be smart about it, make sure you're managing your capital accordingly and sizing accordingly, right?
Where do you guys? We have 2 minutes left. I want to hear your answer. Each person, very important. Where do you think the price of Dogecoin will be tomorrow?
No one here is going to answer that question.
No. It's gonna be now studied, the whole TikTok situation with that, and it's gonna be studied in the future. And you guys, all your research papers and your LPs and your VCs are calling you guys what's going on. But thank you all for being here today. Binance turns 3, amazing day. Roei Leva from Efficient Frontier, Michael Feng from Hummingbot, Darius Sit, QCP Capital, Justin from Cumberland. Thank you guys so much for coming today. This was awesome.
Thanks, Charlie.
Thanks a lot, guys.
Thanks, Charlie.
Charlie.